Walmart reported quarterly financial results on November 19th, 2024. That surprised stock market investors. Walmart has done a great job re-accelerating revenue growth from a very slow flat to low single digit growth business to now growing in the mid single digits. That's a huge improvement for a company that generates over $600 billion in annual sales. So in this video, I'm going to review Walmart's latest results and update my buy, hold, or sell recommendation for Walmart stock. I'm going to do all that in this short video, so let's get into it.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Walmart reported revenue of $170 billion in the latest quarter, and that was up by 5.5% from the same quarter last year. That increase in revenue led its gross margin to increase by 21 basis points, led by Walmart United States business. The management team was so pleased with the results that it's increasing its guidance for the rest of the year, raising sales growth to a midpoint of around 5% and operating profit margin increase or operating income increase over 9%. But I'll talk a little bit more about the guidance, the forward look ahead guidance, a little later in the video. Walmart also said that the return on assets increased to 7.8% and the return on invested capital at 15.1% were up 100 basis points from the same quarter last year. Now, this is critical for a company the size of Walmart that has so many assets worldwide. You want them to generate strong profits on those assets. Otherwise, investors will push Walmart to divest some of those assets because they're underperforming, which Walmart has done sometimes, right? Some parts of its business it sells off, other parts of its business it reinvests in growth. Walmart does a pretty good job at managing its assets, and when you're a size as Walmart is, it's very difficult to do that. So they've managed to do this relatively well. Now, the part of its business that's the most exciting for me as an investor, well, I shouldn't say the most exciting, but the part of the business that's contributing to the company's profit margin expansion is the online part of its business now. For years, the company was investing in developing and growing this part of its business. It was slow to do it, admittedly. It was slow to catch up to the changes in consumer behavior. It allowed Amazon a significant head start, and Amazon was taking huge market share away from Walmart and other brick and mortar retailers. But Walmart is catching up. And one area of the business that's growing robustly is advertising on the website, right? So that business grew 28%, including 26% for Walmart Connect in the US. Now, if I compare that to Amazon, Amazon's advertising revenue grew by roughly 20% in the latest quarter. So Walmart's advertising business is gaining market share. And then if you think about the advertising industry overall, not just comparing to Amazon, that grew like around 10%, a little bit less than 10% in the latest quarter. So Walmart specifically compared to the overall industry is gaining significant market share. And that makes sense, right? Walmart generates over $600 billion in annual sales, and the company has millions and millions of people that are visiting its website. So, of course, marketers will be interested in advertising on that platform, trying to influence the decisions of the consumers going to the website to make purchase decisions. This part of its business, I suspect, will continue growing robustly over the next several years because Walmart has a lot of market share to gain here. It's only recently started this initiative, so it's only started a few years ago, and so it's got a longer runway for growth here. And the industry overall is shifting its spending to digital channels like the one that Walmart offers. So it's got strong tailwinds in that category. Looking at cash flow from operations, it's operating cash flow of $23 billion year to date in 2024, or for Walmart, its fiscal year 2025, is up $4 billion from the same quarter, from the same time last year. Free cash flow of $6.2 billion is up 2 billion from the same time last year. And again, one of the reasons that's driving this growth is the shift to the online website, Walmart Connect, where some third parties are now placing inventory on the website. And so it makes it easier for Walmart to manage inventory, to decrease inventories, while at the same time boosting sales because third parties can place that inventory on the website, or it can make arrangements with its suppliers instead of the suppliers having to ship these products to Walmart and then Walmart having to post them up on the website. It can make arrangements with its largest suppliers to put these items up on the website themselves, retain the inventory on their own balance sheet, and then ship them to the customers when there's a sale. So the online business really helps Walmart manage inventory, increase return on assets because they're not holding on to those assets themselves. Of course, Walmart would prefer customers come into their stores in person because that's where people make impulse purchases. They might buy a bottle of water that's right next to the aisle for $1.50 or something like that, a soda for $2 when it's refrigerated, whereas if they went to buy the 2-liter bottle, it would be a lot lower. So higher margin sales happen when people visit in person. And also, Walmart doesn't have to pay the shipping expense when people buy in person as opposed to buying online. That's why Walmart hesitated so much before leaning into the online business. But now that it's leaned into the online business, it's starting to reap the benefits of those results. Walmart US saying that the part of the business that's doing really well is strength across merchandise categories, both physical and digital channels. But primarily, market share gains are coming from upper income households. This was interesting to see. Upper income households who previously may have not shopped at Walmart because they felt that, it's beneath them or that the products are of lower quality and they may have preferred to shop at other places, are now more often than not choosing to go to Walmart. And Walmart is gaining significant share with these upper income households. Inflation has been a significant story in the United States in the last 4 years, and it's taking away the purchasing power of households. And so households are looking at ways where they can get more value for their dollar, and Walmart offers that to consumers where they offer a lot of low prices, and consumers can spend when they spend $100, they get a lot in return at Walmart compared to if they go somewhere else. In fact, Walmart is a lot better value, in my opinion. When I go shopping, Walmart offers a lot better value than Target does. For instance, if you're looking at just a sweater, at Target, you might pay $40 for a sweater, whereas Walmart, it might be half that price. So just one item I'm talking about, and across the board, when I compare items from Target and Walmart, Walmart usually has the advantage in lower price. So e-commerce sales were up 22%, and it was led by store fulfilled pickup. And this has been a very popular category, the buy online and pick up in store. Walmart has done a great job with this as well. Target, I feel like, has done the best in this category in terms of executing on this strategy, but Walmart is a close second place. And consumers have really liked this. Consumers have really liked this feature where you can buy on the website or on the app, and then you go to the store in the parking lot and they'll bring you your order to your car, so you don't have to get out of your car. And people have really liked this. It's added billions and billions of dollars in sales for both Target and Walmart. And I suspect this will continue because of the convenience advantage it adds. And also, you don't have to wait 2 or 3 days for your order to arrive if you're buying online from even Amazon. Can't deliver it as quickly as you can get from these features. So this is something that will also drive growth for Walmart in the future. So this year has gone so well for Walmart that they've increased their guidance for each consecutive quarter. They initially said revenue was going to grow at 3.5% at the midpoint. Then they raised it to 4%, and now they're raising it to 5%. So consecutive increases in sales. The same thing for earnings per share, where they first forecast EPS of $2.30 at the midpoint. then $2.40 at the midpoint, and now $2.45 at the midpoint. So with each consecutive quarter, they've raised their guidance. Walmart, unsurprisingly, the stock price has performed really well in 2024, up to almost $90 a share from close to $50 per share to start the year. These are phenomenal gains for a stock like Walmart that's supposed to be a safe stock that doesn't double in a year, but here it is performing excellently in 2024. Now, Walmart's valuation has also gotten expensive. It's now trading at a forward price to earnings of 32.6. This is similar to Amazon's valuation, and I don't think it's justified. So, to answer the question, do I think Walmart stock is a buy, hold, or a sell right now? I would say Walmart stock is a hold right now because of that premium valuation. Walmart stock doesn't usually trade at these high levels of valuation because this company, at its level of revenue with its growth prospects, doesn't warrant a premium valuation like that, in my opinion. So I would say this stock is a hold right now. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.